Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mark-eitel.
All right, my name is Mark-eitel, and you are listening to the Mr. Mortgage Show. And you, my friends, are in the right place if you've got questions and you want answers. Do you have questions about, is it a good time to sell? Is it a good time to buy? What are interest rates doing? What's the Federal Reserve going to do to the housing market? What in the heck is going on out there? Guys, if you want the information, the data, the tips, the tricks, the strategies that you need to make better real estate and mortgage decisions for you and your family, you are in the right place. My name is Mark-eitel. You are listening to the Mr. Mortgage Show, and we do this every week right here at 11 a.m. on WPSL, coming to you just before Clay and Buck. And Jen and I are super excited to be with you. Jen, my producer, is womanning the Anytime hotline, and she'll get your questions on the air. You can call or text her your question at 855-462-7292. That's 855-462-7292. That is the Anytime hotline. You can write that number down, 855-462-7292. That rings directly into the studio when we're doing the show every Thursday live, or it pushes to my office when we're not in the studio. So that's why we call it the Anytime hotline. Jen, you look like you are in a good mood. Have you had a good week?
It's been a fantastic week.
All right. I've had a great week too. Guys, I hope you had a great Thanksgiving holiday weekend. And I don't know how many of you joined us last week. We had a pretty good turnout. We had some good, kind words emailed to us. But Jen and I jumped on the air and did a Thanksgiving show, and we shared some things that we were grateful for. I think we did have a couple of real estate questions pop in also, but it was just about saying thanks to everybody. We greatly appreciate your support. You support the show with your questions, with your participation, and we are super blessed anytime someone reaches out and it trusts us with their mortgage or real estate needs. Guys, we are honored to earn the right to be your mortgage company or to refer you to a really great agent. And looking back on the year, it's been a great year. I know the market's super frustrating for a lot of people, and housing prices and interest rates and all of the nuances surrounding that can be overwhelming. But every time we get the opportunity to work with a new client and kind of cut through all that noise, most of the time they're pleasantly surprised to find out that, yes, they can afford a property, qualify, and buy a property. It's that look on people's face is always so amazing, and a big part of why I do it. But that was last week's show, guys. I was all up in my feels and super thankful and grateful, and we shared all of that. So if you want to catch last week's episode, if you were busy watching football or cooking the turkey or watching the parade or the dog show or whatever you were doing last week, check out MrMortgageRadio.com. We post, Jen, in addition to everything else she does, she mans the board, she runs the board, womans the hotline, the email line. She also posts the recorded version of the radio show up to the podcast page. And guys, that's at MrMortgageRadio.com. But hey, we're going to dig right into this week's show. We're going to start, as always, with the data. I know it's super confusing out there because every time you open up a news site on the web, or if you're like my neighbor and you still get a newspaper, every headline seems to indicate that the housing market is crashing, right? I saw another headline this morning that said, pending home sales plummet. If you stop right there at that headline and you just read that and you think, oh my God, this is it. We've been hearing it for the last 3 years and it's finally here, the housing crash. Well, we're going to dive into that data. So pending sales are down, depending on which article or data set that you read, is as little as 30% or as much as 37% decline in pending sales. And those are homes that are actively for sale, already under contract, and they're working through whatever contingencies towards a closing. So those homes have not yet sold, but they're under contract. that number is 30% lower than it was for October of last year. So clearly a big slowdown in the activity, but let's keep it going, right? So total number of listings is down 0.5% year over year. And new listings are down, again, depending on the data set that you read, somewhere between 16 and 20% year over year. So fewer new properties coming to the market, fewer properties under contract in relation to where we were last year, October of 2021. So clearly the number of properties being offered for sale and purchased, those numbers are down. But here's where the rubber meets the road. And the real thing that everybody cares about is the price of the home. Home prices on average are still up 12.21% year over year. And this data is according to Realtor.com. Now, Trulia, Zillow, CoreLogic, everybody publishes a similar data set, but all the numbers vary a little bit, but not significantly. Even if you round that down to 10%, we're still at a double-digit appreciation rate, which is mind-blowing to me, right? Because when you read the headlines, you'd swear this is 2008 all over again and the housing market's about to crash. But guys, if you've listened to the show for any amount of time, you know that the only, and I cannot emphasize this enough, the only, that's three onlys, thing that controls prices is supply and demand. It's inarguable. When more people want to sell than want to buy, prices go down. When more people want to buy than want to sell, prices go up. When that number is equal, prices stay flat. And we're transitioning into more of an equal market, but we're far from an oversupplied market pushing prices down, and this data supports it. Fewer homes coming to the market, fewer homes selling, yet we're still seeing a double-digit appreciation cycle year over year. And guys, that's not to say that things aren't going to continue to slow. You've heard me say it for a long time. I believe we're going to fall down into a somewhere between 3 and 8% appreciation rate, which is still healthy. I mean, as long as appreciation is happening, it doesn't matter at what rate, it still makes sense to buy property. Hell, if properties never go up again in value, if you buy a house for $300,000 today, and in 50 years it's still worth $300,000, it was better to buy it and own it than it was to rent it. And I can go on and on and on. And if you have questions around that, call or text 855-462-7292 and we can deep dive that, because it's super confusing. People think the only benefit to home ownership is appreciation, and that could not be further from the truth. Principal reduction earns equity. Appreciation earns equity. Owning a property affords you tax write-offs, so you pay less income tax if you're a property owner. And more importantly, you know it if you've been renting over the last 2 or 3 years. Every year you get a knock on your door, you're cringing at what rate or rent hike you're going to get this year. Well, owning a property alleviates that. That's not going to happen because a fixed rate mortgage principal and interest doesn't increase, and certainly not at the whim of the landlord. So guys, we're going to dig into all that. We've got a great show lined up for you this week. Also, too, we're going to finish off. Guys, on the other side of this break, we're going to dive into the foreclosure data too, because a lot of people are beating the drum saying that's where all the supply is going to come from. We're going to talk about new construction forecasts and the foreclosure data. And I think you will be surprised because, again, it supports the supply and demand equation that I've laid out for you. But hey, you hear the music, you know what that means. That's my cue. We'll be back in 2. Sit tight for 2 minutes. And on the other side of this break, as I mentioned, we're going to dissect a little more of the data, but more importantly, we're going to get to your questions. And Jen is standing by watching the Anytime Hotline, which is 855-462-7292. Call or text your questions. But sit tight. We'll be back in 2 minutes. Hey, it's Mark-eitel, host of the Mr. Mortgage Show.
You hear me all the time talking about the need to have the very best team representing you in a real estate transaction, and that starts with a really great agent. If you've got a great agent, that's awesome, but if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Hey, it's mark-eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
We're back. Hey guys, my name is Mark-eitel, and you're listening to the Mr. Mortgage Show, and we do this each week right here, same time, same station. I'm with Jen, my producer. She is womanning the Anytime hotline, and you can call or text that hotline with your questions, and that number is 855-462-7292. That's 855-462-7292. That is the Anytime hotline, and as I mentioned, call or text your questions. Hey, and I was wrapping up some thoughts around the data right before that break, and I kind of teased you that I was going to talk about foreclosure data because you hear me say it all the time, guys. Supply and demand, supply and demand, supply and demand. Whether it's hand sanitizer and toilet tissue during the pandemic, real estate, tulip bulbs, ice cubes, whatever it is, if there's more people selling than buying, that's what it's going to take for prices to go down. And yes, higher interest rates might slow demand down to a point that there's more supply, but we've not yet reached that. And rates pulled back a little bit this week, so a little sigh of relief, right? So we've seen some people jump back in just because rates have kind of stabilized. We still have to get through the December rate hike and the minutes of the upcoming meeting, but for the time being, things appear to be a bit stable. But let me keep this plowing forward. Foreclosure activity, right? Where's all the supply going to come from? We talk about it all the time. A lot of people are out there beating the drum that it's going to be foreclosures. Well, not so fast. I hate to disappoint the drum beaters, but right now, mortgage delinquencies are the leading indicator of a foreclosure. Let me start by saying that. So a delinquency is when you start to fall back on your payments. You're late. You're 30 days late. Now you're 2 months late. You made last month's payment. You're only 30 days late. You might catch it up. You might not. You've started to establish a pattern of delinquencies with the payments. That is the precursor to foreclosure activity. Nobody just immediately goes into foreclosure. There's a process that it takes months and months and months, and it starts with late payments. So we watch the mortgage delinquencies carefully because, again, that's the precursor to a foreclosure. And right now, delinquencies are falling. So one more place that we're not seeing inventory coming to the market. And as I mentioned in that last segment, Builders have indicated fewer new housing starts next year over this year. So again, another pressure point on supply. And lastly, we talk about it a lot, the sudden increase in interest rates. And by sudden, I mean over the course of about 6 months, we saw rates double. That's never happened since anybody's been watching the market data. We've had increases, but we haven't had a doubling that quickly. And yes, it was a product of artificially and historically low interest rates. So getting back to normal doubled the rates. It just happened faster than anybody expected. And you've heard me say it before. And if you haven't, I liken it to an airplane. It's not necessarily the speed. It is the velocity that's a challenge. And think about it, when the plane takes off, that sudden change in velocity moves you forcefully into the back of your seat, and you can feel that, the G-forces, I guess, if you will, probably not G-forces, but you get what I'm saying. You feel the acceleration. But then when you're in the air, you're going 400, 500, 600 miles an hour. You don't feel the speed. And that's what happened with mortgage rates. They raced up so fast, the velocity of the change caught everyone off guard. But now that we're here, the 6% interest rate environment is not a high interest rate historically, much higher than where we came from, but we should have never been where we were. And if you listen to the show, you know, for all the reasons I touch on week after week, I don't think we're going back there. But I just wanted to finish up that thought because foreclosure activity appears to be slow and slowing moving into this next market cycle. And guys, if that changes, we'll be the first to notify you. You know, for me, I certainly don't want to see a crash, but I don't want to give you false information either. So we just give you the data. We get the headline out of the way because oftentimes the headline is just, you know, what is that old saying? If it bleeds, it leads. So they just try to scare the heck out of you with the headline. But hey, we're going to jump into your questions. Jen, do we have some questions stacked up over there?
We have a lot of questions this week.
All right. Well, let's dig right in. Throw the first one at me.
Lloyd just sent this. I'm getting my son ready to buy his first house. It will be in Gainesville, close to the campus. He's 17 years old. What's the minimum age to get a mortgage?
Hey, Lloyd, that is a fantastic question, and one that I don't think I've ever been asked on the air. Brilliant, brilliant question. So the real estate contract and the mortgage contract require someone to be of legal age, and that's 18. So if your objective is for your son to buy this just in his name, you're going to have to wait. And it sounds like, you know, with him already being 17, I don't know, you know, strategically when that birthday falls versus him moving to Gainesville in that first semester. But you might have to wait. You might have to buy it in your name, and you can lease option it to your son, or you can add him to the deed, and then he can refinance it into his name once he's 18. The challenge that you might find, though, is with someone that young, it's highly unlikely that they've established work history. And you might have already solved this. I don't know. I'm just saying, theoretically, someone at 17 may not have the 2-year work history necessary to support that mortgage payment. Now, you could be a non-occupying co-borrower and alleviate that pressure from his income side of things, which may be your strategy. And it's a brilliant strategy, and that would work. And actually, the more that I think about this out loud, I'd love to have a conversation with you because I've got a couple ideas that might work for you. I would just need a very, very quick conversation to get a little more info. But to answer your initial question, of legal age for a real estate contract is 18 years old. But I got to commend you because it's a brilliant strategy to buy either a condo or a townhouse close to campus. He can get some roommates to help with the bills. And more importantly, you're establishing equity wealth for either yourself, or in this case, you want to do it to help him. But that's amazing to get started so young, and a property close to campus, you know, that's going to be a wonderful property that's easy to rent long term. And brilliant, brilliant strategy, Lloyd. I congratulate you for thinking that far ahead, and I'd be happy to jump on a call with you because I do have a few questions. But thank you for that. Hey, Jen, let's see if we can get another question in.
Peggy is asking, how does homestead portability work? Do we lose it if we rent for a few months before we buy?
Hey, Peggy, that is a brilliant question, and I'm going to break this into two parts because I know we're getting close to a break, so I might have to pull this into the next segment. But let me start with your question about the losing it if you rent it in between ownership. So in Florida, you have 3 years to use your portability. And the portability is a tremendous benefit to your real estate taxes because a lot of people purchased their property some time ago. It's accelerated in appreciation. So the gap between the taxable value and the market value can benefit you if you port that over to the new property. So brilliant question, but 3 years you have to use it. And I've just closed a transaction this week with a client who did just that. They sold their property up in St. Augustine, relocated down to our area a little over 18 months ago, and have now found a property that they want to call home long-term, and they're going to use their portability. So brilliant question. You don't lose it immediately, but just like anything else in life, you're going to lose it if you don't use it. And in the case of portability, you do have a 36-month window. So I hope that helps. That was a great question. If you have more questions about the portability and how it works, on the other side of this break, I'll give you a few insights on how you can research it for yourself because most of the county websites will allow you to plug in your departing residence information and see how the portability will save you some money in taxes. But brilliant question. You hear the music, you know what that means. That's my cue. We'll be back in two. Sit tight for 2 minutes, and on the other side of this break, we'll be back with more of the Mr. Mortgage Show.
Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the REC loan he advertises. Long story short, we did a REC refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
Hey, it's mark-eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is mark-eitel, and you heard the man. You are tuned in to the Mr. Mortgage Show, and we are so glad you're with us. Thanks for spending a little bit of your day with us. Jen and I are always excited to do the show for you, and we do this each week right here. Same time, same bat time, same bat station. But you heard the man. If you have questions, you can call or text 855-462-7292. That's 855 462-7292. That is the Anytime hotline. And guys, we've made it super duper duper easy for you. If you've missed any of the show or you want to hear something a second time, we've put links to the Facebook page, which is where we post all the data sets, the links to the podcast, which is where Jen posts all the recorded stuff, links to the corporate site, to more information about me and my team. It's all in one place now, and it's at mrmortgageradio.com. That's mrmortgageradio.com. It is super easy to get all the Mr. Mortgage info that you need, and more importantly, access to the data that we talk about on the air, because we do post it to the show's Facebook page each week after we're done doing the show. And hey, Peggy, to finish up on your question, Peggy asked a brilliant question about portability and how long you have to use it. I'm going to post what I think you'll find helpful to the Facebook page also, because it explains the different ways you can port over that gap between market value and taxable value, as I mentioned, because it is different if you're upsizing, meaning the new home is more valuable, than the home you're selling, and vice versa. If you're downsizing, there's different formulas for how much of that tax savings you can port over, but it is a 3-year, it's actually 3 taxable years. So it's not 3 calendar years from the date of sale of your prior primary residence. That was interesting. But anyway, I'm going to post that to the Facebook page. And if you want to read it for yourself, go to mrmortgageradio.com and click on that Facebook link. But I think you'll find that helpful. And then just to finish up that, you heard me mention that you can do the calculations yourself. Almost every county has this. I know St. Lucie County does. If you go to the county tax assessor website and you go pull up a specific property and you go to the bottom of it, there's a section where you can type in, you're going to purchase this property for X, and there's a portability calculation right there on the page. If you need help with that, just shoot us an email. I'll shoot you back a link that'll explain it for you. But brilliant question on portability. And it's one really, really beneficial thing. A lot of people don't realize how much the tax savings can be by porting over. One caveat is that the prior property that you're porting that from obviously has to be your primary, that you've had homestead exemption in Save Our Home, Save Our Homes, which is that portion of the benefit that caps how much a property can go up each year in taxable value. And guys, let me just cover that real quick, because that wraps a lot of people around the axle. You'll look at a property online that's for sale for, say, $400,000, and you look at the property tax and it's like $900, and you're thinking, wow, that's super affordable property tax. Well, it's not going to stay $900. As soon as you buy it for $400, the market value is going to reset. What likely happened was the current owner has homestead exemption and also the Save Our Homes cap, which prevents the taxable value from increasing more than a predetermined percentage each year. And they likely bought that property for $40,000 or $50,000 100 years ago. Well, obviously not 100 years ago, but you get my point. So that's not representative of the taxes that you're going to pay. So if in that example, if that person was selling and moving, they're obviously going to want to port that Save Our Homes portion of that over to the new property. So I probably confused more people than I clarified the topic for, but if you have more questions about that, I'm always open to a discussion. But hey, you hear me say it all the time. Your questions are my favorite part. So Jen, I'm going to throw it to you for another question.
Here's a text from Rochelle. I'm 77 and receive $2,300 per month from my pension and $217 in Social Security income. I can't afford to keep my house and I'm ready to sell. Can I qualify for a new mortgage with just pension income?
Wow, that is a great question. Before I answer the question, I have to sing to you because Rochelle rhymes with Michelle, and Michelle, my belle, jumped into my head. So Rochelle, my belle. I'm sorry. I'm trying to serenade you, and that sounded horrible. But hey, Rochelle, brilliant question. Yes, so you can qualify for a mortgage using pension and Social Security income. The caveat is that income needs to remain in place for the next 3 years. So We're going to look at your Social Security awards letter and then the pension documentation just to confirm that it's going to remain in place for the next 3 years. That's how income works from those streams as far as underwriting is concerned. Has it been there for 2 years? Will it remain in place for at least the next 3? Let me say this. I hate to hear that you're in this position, because a lot of people are in this same position because of the cost of living and because of the increase in insurance. Because as your home goes up in value, the replacement cost becomes more expensive, and insurers require the lenders require the replacement cost or the mortgage amount, whichever's less. So we're hearing more and more people that are getting increased insurance, increased taxes, but more than just that, it's the overall increase in living expenses. And the fixed income senior, which you've clearly clarified that you're in that boat, they're struggling in this economy because look at Rochelle. She's got $2,600 a month to work with. And every time we go to the grocery store or, the gas station, we're reminded of the increase in the cost of everyday life. I've got some ideas for you. You can do a reverse mortgage if you have enough equity in your property now and stay in place and let the house pay you each month. You have no monthly mortgage payment, and you can access that equity in the form of a monthly payment to you in the form of a credit line. It operates kind of like an equity credit line, or you can just take a lump sum of money out and do with it what you wish. But my point is, you're not going to be burdened by that monthly payment, and maybe having that additional monthly income will allow you to stay in the house should you wish. I'm just saying that's an option. Another option would be sell the property, take a portion of the equity, put it down on a new property, and use a reverse mortgage to purchase the new property. And then you go into a scenario where you have no monthly mortgage payment. You do have to pay your property tax. You do have to keep the home adequately insured, but you're not paying that monthly payment, principal and interest. And then, obviously if there's an association, you would be responsible for that too. But we see a lot of people use that reverse mortgage strategy to provide additional income for them by accessing that equity today. So if that's of any interest, and to answer your question, yes, your pension and your Social Security alone can be used to qualify you for a new mortgage. But if the home that you're in is where you prefer to stay and you've got equity, that reverse mortgage strategy may allow you to do that and reduce your monthly expenses, but more importantly, provide an additional income stream, or use the reverse mortgage to purchase strategy and then get into the new property without a monthly mortgage payment, and a lump sum of that equity is now in the bank giving you some cushion. So I know that this concept, this strategy requires a lot of conversation, and you're going to have a lot of questions, and I'm happy to spend the time with you. So if you'd like to schedule a call, I'm super passionate about the reverse mortgage space only because I see the difference that it makes for somebody that's in your situation. And I'm doing this reverse mortgage conference, if you will, or speaking. I don't know what to call it, but I've been invited by some financial planners who speak to seniors about retirement, post-retirement income strategies, and they've had me come in on more than one occasion and speak about reverse mortgages. And we're going to schedule some in Port St. Lucie. We've talked to a couple of the local churches in the area who have banquet halls, and we may start to do a series where we can just, like we do on the radio, an open Q&A, but specifically about reverse mortgages. So, hey, thank you so much for that question. I think you've got some strategies to consider, and I would be happy to walk you through them. 855-462-7292 is the best way to reach us. But I appreciate your question. Hey guys, you hear the music, you know what that means. That's my cue. We'll be back into Sit Tight for 2 minutes. On the other side of this break, we'll be back with more of the Mr. Mortgage Show.
Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallygreatagents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallygreatagents.com, www.reallygreatagents.com.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop, and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to Mark-eitel and the Mr. Mortgage team.
Hey, it's Mark-eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark-eitel, and you are listening to the Mr. Mortgage Show. And you heard the man. You can call or text. He leaves that off every time. Call or text. Text 855-462-7292. That's 855-462-7292. That is the Anytime hotline. And if I sound out of breath, it's because I ran down the hall to grab a bottle of water and race back into the studio during that break. So I'm with you. We're back. Hey, I just wanted to say one more time, thank you, Rochelle, for that question. And, you know, the reverse mortgage space is so close to my heart for many, many reasons. And you sound like a candidate that could at least consider it. And I get it. It's not for everybody, and I would never advocate it for every situation. But this is the type of thing where it can jump in and make a huge difference. So if you need more information and you're not ready to jump on the phone, check out moreaboutreverse.com. We put a explainer video website up there, moreaboutreverse.com, and we go into a little deeper dialogue about some of the common misconceptions, and you can request an info packet if that might be helpful, something you're more comfortable with. But if you want to jump on the phone, I would welcome the opportunity to talk with you. So I just wanted to say thanks one more time for that question. Hey, and speaking of questions, I went long on a couple of them, so I know we've got some stacked up over there. Let's throw it over to Jen and see if we can't work through a rapid round of questions. Hey, what do we have, Jen?
Susanna sent this email. I keep reading about home prices cooling off, but they still seem high to me. Am I missing something?
Hey, Susanna. No, you are not. You are clearly seeing the same information that I'm seeing in the market, right? Especially in the segment of the market that's under 300,000. Those homes are still appreciating at quite a clip and selling rather quickly, because that's now like the new entry point in the market, which is, you know, mind-blowing to me, but we've gotten here pretty quickly. But no, you're not missing anything. If you missed the first segment of the show, check out MrMortgageRadio.com, because I did dissect the data around that very question. But no, home prices are actually up on average nationwide 12.21%. And the Florida market is experiencing pricing support above and beyond that in some markets. So depending on where you're looking, you could see appreciation even higher than that. But hey, great question and brilliant observation. I hope that helped. Hey, Jen, do we have another question?
Timothy texted this one. How many people can be on one mortgage? I'm thinking of buying a house with my girlfriend and her sister. Maybe her sister's boyfriend if we could all go in on the loan. Is that possible?
Wow, Timothy, that's that it is possible, absolutely possible, that the four of you could go on it together. But that kind of seems like one of those crazy reality shows to me. Like, what is it called? Love Island or I don't know. Jen, do you? She's giving me the stink eye because she's not going to admit she watches I think it's called Love Island or something like that, where they just pour a bunch of people into, one amazing tropical setting and they start dating and pairing off, and this one's voted off the island and the new one comes in. My man, what are you going to do if you and your girlfriend break up, or the sisters start to fight, or the sister's boyfriend and she break up? That's going to get super complicated how you carve up that ownership, because if you all buy the property together and you're all on the deed together, it's going to require either the sale of the property, or let's not make it about you and your girlfriend, right? Let's say you guys are solid on your way to happily ever after, but that crazy sister and her boyfriend are on again, off again, 2 tequilas into the end of their relationship on any given Friday night. If that happens and all four of you are on the loan, right? So all four of you are equally responsible for the debt, which means if one or two of you start to flake, the other 2 or 3 are going to have to carry the burden of the debt, or you all get a black eye on your credit report. That's the first thing to consider. Now you're all on the deed. So the only way to get, let's say the sister and boyfriend break up and he moves on, the only way to get him off the deed is going to be to either sell the property or refinance him off the deed, or if he's willing to do it, which is unlikely if they're fighting and breaking up, if he quit claim deed himself off the property, then the 3 of you could own it. But he is unlikely to do that because he can't just quit claim deed himself off the mortgage note, which is the credit portion of this that ties your credit report, your obligation to repay. He's married to that mortgage until you refinance. Now, you guys could refinance and take him off the deal that way. But to answer your question, yes, you can do it. We see it often in multi-generational purchases where, son and daughter-in-law will buy a big house with one of their parents, right? Because multi-generational housing is a thing, and you're going to have the parents in, the mother-in-law suite on the property, and they're there to, you can look after your folks, but they're also there and able to help with the expenses and the credit. We see that a lot. You can have 4 people on the deed and on a mortgage without any restrictions. But the strategy that you're talking about, where you and your girlfriend, her sister, and his boyfriend pull together to first, let me say this. I guess let me back up to say this. I commend you for trying to figure out a way to make it work, because it's worth it. Home ownership creates equity wealth, and the sooner you can start, the better. So I have to commend your creativity and your willingness to do this with your girlfriend and her sister and boyfriend. But just think it all the way through. Make sure that you have a strategy for all of the variables that could pop up. And I caution you only on that aspect of it. I encourage you to figure out a way to buy a place. You and your girlfriend may be able to do it without help. I don't know how far you've gotten down the pre-qualification process. I'd welcome the opportunity to talk with you and see exactly what you would qualify for. Is it income? Is it assets? What do you need the other 2 people for? Because if it's assets, maybe the 100% first-time homebuyer program that we talk about could help with that. Gift funds from a parent could help with that. If it's income and you just need everybody's income together to support the debt, then that's an entirely different thing. But brilliant question. I'm sure that's not the answer you expected, but I'll be happy to deep dive it with you if you wish. But I'm going to throw it over to Jen and see if we can get another one on the air.
Armando called this one in. Last week you were talking about a 100% loan for first-time buyers. Can you explain how this works? Thanks. Great show.
Hey, thanks for that, Armando. And thank you for the great show comment. I always appreciate that. I say I don't have an ego, but every time somebody says great show, that little tiny ego pops up and gets a big smile on his face. So I appreciate that. And I just kind of alluded to that with that last question from Timothy. So the 100% loan program is an FHA loan to 96.5% with a 3.5% grant for first-time buyers. And the very cool thing is that 3.5% does not accrue interest, and it does not require a monthly payment. But here's the big thing, drum roll. I don't know if you can hear that. It also doesn't require any repayment, so no monthly payment. But if you refinance or sell the property, that 3.5% grant is forgiven. So it's good for any employment category. You don't have to be a first responder. It works for first responders, but unlike the Hometown Heroes program that's specifically for certain employment categories, this is for any first-time home buyer. And guys, remember, in the world of mortgage and underwriting, first-time buyer means you haven't owned real estate in the last 3 years. So if you owned a home a while ago and it's been 3 years, that you're a first-time buyer, and these programs are available to you. But just to finish up, the only difference with a traditional FHA loan is it does require a 620 credit score, because FHA can go down to 580, but this particular 100% combined program, this first-time buyer grant program, does require a 620 credit score. But I'd be happy to get you started down that path should you wish. If you need more info, give us a call, 855-462-7292. But Jen is giving me the cue. You hear the music. Sit tight for 2 minutes. On the other side of this break, we'll be back with more of your questions and more of the show.
Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant file our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
Hey, it's mark-eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And guys, we do this each week right here at 11 a.m. on WPSL. We are so very excited to be with you. We are broadcasting from the Mr. Mortgage Studio and are always available to you. If you need us, give us a shout, 855-462-7292. That is the Anytime Hotline. That's how you get your questions on the air right now, 855-462-7292. And if you have questions when we are not on the air, that pushes to my office. So that's a great number to have. But hey, speaking of your questions, I'm going to throw it over to Jen. I know we've got a couple more. Let's see what we can do.
Bonnie called asking, we're selling our home without a real estate agent. We had a contract, but the buyer couldn't get a mortgage approval. Is there something we can do differently next time so we know a buyer is able to close?
Wow. Hey, Bonnie. First of all, I'm sorry to hear that, because you should never go into contract without a bona fide approval. And I know when you're doing it yourself, showing the property and making it pretty and proper and even pricing it correctly is not that difficult in today's day and age with all of the technology that we have. We have people often that are asking for that value report that you hear me advertise for this very reason. They're going to sell their property themselves and they want to know how to price it. So we run the free it's freevaluereport.org, but we run our valuation report and shoot that over to you. But anyway, you've got all that done already. So a lot of people, especially in a hot market, attempt to do this themselves. And if you've got the time and the expertise, why not, right? I get it. But here's the thing. This is one of the risks of doing it. You've tied the property up with somebody who can't close. So I'm happy to review any approval that somebody submits to you for consideration. I'd love to write the mortgage for them. If they're not working with someone, I'm happy to get them approved and let you know that, they're as good as cash. We've got them all the way through the AUS approval process. And I've talked about that a lot over the last several months that we've been on the air here. And the many, many years that I've been in the business, we always talk about the AUS, or automated underwriting system approval, which basically, as I mentioned, assuming that the property appraises and there's no inspection issues, that buyer at that point is as good as cash, as long as they don't lose their job or buy a car before closing. But yeah, I would be happy to do that for you. I can approve anybody who's considering buying your property, or at very least, I would be happy to review their approval and just make sure that they've gotten far enough into the process that they're a rock solid buyer. And it sounds like that might have saved you a little bit of pain on this particular contract that you had. But hey, I appreciate the question and certainly understand your desire to do it yourself. But that's the only thing, is that mortgage piece sounds like it was missing from the contract that you just had. But to answer your question, get with a mortgage lender or broker, or with us. I'd love it to be us. I've got my hand up. I'm waving at you. I'm happy to help. Somebody to review that approval, or more importantly, to approve them through the AUS system so that they're rock solid. But Bonnie, thank you for that question. That was a brilliant question. And you're not alone. There are a lot of people out there doing the same thing. But hey, while I'm thinking about it, that brought something to the forefront of my mind. I'm going to ask you a favor. If you've got any friends or family, coworkers, people that the guy at the end of the breakfast bar or in line behind you at Publix, if you hear somebody talking about the mortgage, real estate, they're thinking of buying, they're thinking of selling, they're thinking of refinancing, guys, I'm hoping I can count on you to introduce them to me, to the show, to my team. We've been doing mortgage and real estate transactions in right here in our local area. Back in 1999 is when I started. So we've been kicking around for a long time. I remember when GDC pulled out of Port St. Lucie and left vacant lots as far as the eye can see, and now we're waiting for 2 and 3 traffic lights just to get through some of the intersections in town. But we've been kicking around for a long time, and if you know anybody who needs help, I'm hoping I can count on you to introduce them to us. Just give them the link, mrmortgageradio.com, mrmortgageradio.com. That is now the centralized location for all things show related, my mortgage practice. If someone needs an agent, we are part of the Really Great Agent network. We can refer you to a really great agent, and sometimes the agent can make a huge difference. So, guys, you hear the music. You know what that means. We're wrapping up the end of another show. I can't believe another week's gone by. Man, I hope you're coming out of a wonderful Thanksgiving holiday and leading right into a Christmas that you are going to celebrate with the people that you love. And hey, guys, we've gotten through another year of this craziness. And for that reason alone, it's worth celebrating and looking forward to 2023. And look forward to it with some excitement. Real estate's not crashing. The world's not on fire. And we've got strategies that we can help you still accomplish your goals. So, guys, have a fantastic week. I'm going to throw it over to Jen. Hey, say bye, Jen.
Goodbye, Jen. Have a great week.
Have a great week, everybody. We will see you back here next week, same time, same station.
That's a wrap. Join mark-eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages right here on The Mr. Mortgage Show.